Michael Saylor just sold more Bitcoin in the last week than Strategy has sold in its entire history. And the Wall Street Journal had the obituary out before the market even opened. Price dumped on the headline, then came all the way back up by lunch. The mainstream media flew to Vegas to make Saylor look like a crazy cult leader.
If you're going to ask me these questions, you cannot interrupt me.
And while everyone was staring at Saylor, the real story was happening everywhere else. China's housing market just erased 20 years of gains. American home sellers now outnumber buyers by the widest gap ever recorded. And central banks are hoarding gold like it's 1971. Something much bigger than one company's balance sheet is moving. This is Truth Block. I'm Hurley. Let's mine truth. Quick favor before we dig in, many of you who watch every week are not subscribed. If this show helps you keep your head while the headlines get loud, subscribe to Simply Bitcoin. It's free and it keeps the signal coming. So let's start with the huge news this morning. Strategy filed an 8K with the SEC disclosing that they sold 3,588 Bitcoin last week for $216 million. Now, that is by far the biggest sale in the company's history, but let's keep it in perspective. They're still holding 843,775 Bitcoin, and they're sitting on $2.55 billion in cash. It looks like the knee-jerk reaction to the sale took Bitcoin down to 61K, but by midday we were back above 63K and the 200-week moving average. STRC has clawed its way back to $90, and MSTR is now above $100. So that's the scariest Strategy headline of the year, digested in hours. If you saw our last episode, you know the frame. The wick-off spring. The play is to break the floor on purpose, flood the zone with fear, and collect the coins at the bottom. And this morning's FUD wave is the same machine running, with its favorite character back in the spotlight. The Wall Street Journal published an article early this morning claiming Strategy is trapped by its own broken Bitcoin math. And it goes beyond the financial press. Channel 4 is national news in the UK, and they flew to the Bitcoin conference in Vegas to sit down with the most convicted Bitcoin bull alive.
There was a lot of hope in that room. The woman told me that she's worked all her life, she's got nothing to show for it for her retirement, she's now investing in your company. Is that a heavy responsibility?
Well,
do you take that responsibility seriously?
Do I have a responsibility? Yeah, of course I do. To millions, tens of millions of credit investors, tens of millions of equity investors, and hundreds of millions of credit investors. And our role is to explain to politicians why Bitcoin is good for the world. It's our job to
Is Bitcoin good for the world?
Of course it's good for the world.
Why is it good for the world?
You have some money and you want to keep it forever and give it to your kids' kids. The idea of economic immortality or economic sovereignty so that your family is economically secure. That's a very compelling idea.
Immortality is very compelling for everybody.
Spiritual immortality is the basis of religion. Economic immortality is the basis of Bitcoin.
Throughout the whole 20-minute video, they're painting Bitcoiners as crazy ideologues and Saylor as a cult leader, preying on desperate people. And it gets worse. Through the whole interview, she just keeps interrupting him, until Saylor finally had enough.
What happened last year? What happened with the price
last year? It goes
last
up and
year?
it goes down, but it's irrelevant because the point is it's going up at double to triple the rate of the S&P over the long term because it's economically superior.
People shouldn't panic if it loses 50% of its value. Is that the crypto winter?
No, the right way to think of it is people shouldn't invest in a volatile capital asset. If you want to make a capital investment in anything, real estate, equity, Bitcoin, you should have a time horizon of 4 to 10 years. If you need the money in the next 4 months, you're a credit investor.
But
you're going down this.
Well, I just want to.
If you're going to ask me the question, you got to listen to the answer. The point really is Bitcoin is the world's most secure digital property network. It's 21 million blocks. It's the cyber of Manhattan. So all of the people in the world that would like to put their money in a bank in cyberspace, they don't trust the government. They don't trust a company.
But you're a company. You're a company. You represent a company.
Are you going to keep interrupting me, or are you going to listen to the answer? Even though 10 million companies will come and go, and 10 billion people will come and go in 500 years, and the Bitcoin still holds its economic value.
Well, so, unless quantum destroys that idea.
The entire quantum thesis is maybe someone will invent a better computer.
So before we get to
if you're going to ask me these questions, you cannot interrupt me.
Before we get
right, because it's like I'm not going to do this with you. Like you're being offensive right now to do this.
That's the finished framing. A volatile asset, a messiah CEO, desperate retail money. So when the biggest sale in history hit the wires, the story writes itself. The media is portraying him as cornered and dumping his bags on you. So let's do what they won't and actually look at the numbers. Remember, just 5 weeks ago, Strategy sold 32 Bitcoin, and people melted down about it for a solid week. So you'd think a sale 112 times bigger would break the internet, right? Instead, the panic barely made it to lunch. That difference is telling you something important, and we'll come back to it. In Q2, Strategy bought 85,296 Bitcoin and sold 3,620. For the year, that's roughly 175,000 bought against 3,600 sold. That's a ratio of 48 to 1. For every 1 Bitcoin that went out the door this year, 48 came back in. Calling that a seller is like calling a guy who saves half his paycheck broke because he bought groceries. And the entire week-long sale was about 1% of a single day's Bitcoin trading volume. And here's the detail the media skipped over this morning. Strategy sold these coins at an average price of $60,000. Their cost basis is around $75,500. So they deliberately locked in a $55 million loss. Now, why on earth would anyone do that on purpose? Well, it's called tax loss harvesting. You sell at a loss, the IRS lets you use that loss to cancel out gains somewhere else, and your tax bill shrinks. Companies do this all the time. We actually walked through this playbook a few months back in this episode here. Now we're just watching it run at full scale. And there's actually an even bigger reason for the sale. Back in October, S&P Global gave Strategy a B- credit rating, and buried in the report, they spelled out exactly what it would take to get upgraded. 3 things. Improve your dollar liquidity. Reduce your convertible debt. And prove you can still access capital markets during what they called, quote, a Bitcoin stress. In other words, the S&P handed Saylor a checklist. So watch what he's done since. Dollar liquidity, he built a $2.5 billion cash reserve from nothing. Convertible debt, he's bought back $1.5 billion of it. And access to capital markets during a Bitcoin stress? Well, we're currently living through a stress test. A brutal bear market, maximum fear, and Strategy raised money, paid every dividend, and for the first time ever funded all 5 of its preferred by selling Bitcoin, without touching a dollar of that cash reserve. This sale wasn't aimed at you. It was a message addressed directly to the ratings agencies. The machine works even when Bitcoin is bleeding. This is the road to a better credit rating, cheaper capital, and eventually inclusion into the S&P 500. Even Bill Miller, one of the most respected value investors alive, looked at this and said shareholders and Bitcoiners should rejoice. And if all of this sounds like spin cooked up after the fact, here's the part that settles it. Saylor explained the entire machine in an interview with New Era Finance while this sale was quietly underway, days before the news broke.
My belief for an individual investor is take the money you don't need for 4 years or longer, buy Bitcoin, leave it there forever, and your grandchildren will thank you. And if you're going to sell something, sell a shorter duration investment. If you need to sell something, keep the thing that's going to last 1,000 years. And that's my practice. I bought a bunch of Bitcoin. I haven't sold a single sat, but that was money that, I didn't need to pay my medical bills and my, and my taxes. If you need money to pay taxes, right, keep it in a different asset, and that's fine. But my advice to a corporation, right, it's like our company is a unique company. We are a treasury company, and what we do is we sell credit. We sold $10.5 billion of STRC. We bought $10 billion of BTC, of Bitcoin with it. And our credit investors expect that we're going to support the credit dividend and pay it, and our asset is BTC. So they expect, if they're like, are you willing to actually, if you make $1 trillion and you owe us some money, will you sell some Bitcoin to pay us the money? They expect me to say yes, because if I'm not going to pay the dividend, they won't buy the credit. The credit rating agency won't rate the credit, right? The equity investors, they bought a company that's stacking Bitcoin. They expect us to say we're going to defend the equity and we're going to run the company responsibly. So if a short seller shorts the stock to a 90% discount to the Bitcoin NAV, they expect us to defend the stock and swap the Bitcoin for the equity so they don't get abused.
Yeah.
And if I'm unwilling to defend the equity, they won't buy it. And if I'm unwilling to defend the dividend, the credit investors won't buy it. It's kind of like, a A woman's not going to marry you if you're not going to defend her when attacked by it's like everybody wants security, and our job as fiduciaries is we need to defend the credit investors and we need to defend the equity investors. And if that means on occasion we'll buy 20 Bitcoin, we'll sell 1 Bitcoin, and then the credit investors will give us enough to buy 20 more Bitcoin, and we'll sell 1 more Bitcoin. That's actually more tax efficient and it's economically rational. That belief in the credit and the equity is how we got the capital to buy 175,000 Bitcoin. If we lose the confidence of the capital markets, we're buying 0 Bitcoin. And so what the company is doing is rational, and it's in the best interest of the credit markets, the equity markets, and also the Bitcoin market, right? Because like, how is Bitcoin better if I don't buy 175,000 Bitcoin? So in fact, I don't think there's a conflict between doing the right thing for Bitcoin, doing the right thing for the equity, and doing the right thing for the credit. I think that those are all in a very comfortable harmony, in a dynamic harmony with each other. That's why our company went from a $600 million enterprise value to an $85 billion enterprise value.
He told you the plan, and then he ran the plan. Jesse Myers calls this the second dose of inoculation. Sell a little, let the market flinch, sell again, watch the flinch get smaller. Today, the flinch lasted 4 hours. The market is learning the machine. Sell 1 to buy 20, over and over again. And notice why strategy sells at all. Dividends get paid in dollars. The tax bill, the roof, the car, they invoice you in dollars too. The difference is you don't have to sell your Bitcoin to get them. That's why I use Ledn. Ledn lets you borrow dollars against your Bitcoin instead of selling. With Ledn, your collateral stays custodied. It never gets loaned out, and rates are posted up front. They have over $10 billion in loans across 8 years with 0 customer Bitcoin lost. So go to learn.ledn.io/simply and check your rate today. Okay, so the math is clean and the plan was public. So why does a sale worth 0.4% of the stack still shake people? Because most of the world still measures its savings in the old system's units. Houses, bonds, cash. Now look at what the old system did the same week. 1.4 billion people just watched 20 years of savings disappear. That's China's real estate market, adjusted for inflation, back at 2006 levels. And this wasn't a stock market for them. Chinese households keep an estimated 60 to 70% of their wealth in property. The national savings account just round-tripped to 0 gains in 20 years. Saifedean Ammous put it bluntly this weekend. If you think home prices crashing is bad, you have fiat brain. Homes are consumer goods. The cheaper they get, the better. You only treat a house as an investment because your money is broken and you have never known real savings. And before anyone says this is a China problem, American home sellers outnumber buyers by 630,000 right now, the widest gap ever recorded. A house is a thing you live in. It has a roof that leaks and taxes that never stop rising. It became the world's savings account because the money broke and people needed somewhere to hide. That monetary premium trapped inside real estate is one of the biggest pools of value on earth, and it's draining. Over the next decade, I believe it keeps flowing towards the hardest and scarcest asset in the universe. Which raises a practical question. If Bitcoin is where the world's savings are headed, how you hold it matters. Which is exactly why this episode is brought to you by Bitkey. Bitkey is self-custody built for real life, and it's hands down the best wallet I've ever used for ease of use and security. There's no seed phrase to lose in the first place, and the new device has a screen so you can verify exactly what you're approving, and recovery and inheritance are built in from day one, which means no subscription and no extra service. Just peace of mind you hold in your hand. Go to bitkey.world/truth and you'll get 10% off the new Bitkey. Now, the third thread. While households watch their real estate savings evaporate, watch what people who run the old system are doing with their own money. Central banks doubled their gold buying in a single month, 41 tons in May. China bought for its 20th straight month. In the 2000s, central banks dumped around 3,500 tons of gold. Today, they're net buyers of 800 to 1,000 tons a year. And gold has gone from 10% of global reserve assets to 25%. Now, you know on this show we believe gold is real money. It's the old world's money. And the people who print paper are trading it for hard money. They're telling you with their hands what they think of their own product. The debasement trade didn't die this spring. It's on pause, and the marble buildings are using the pause to load up. Larry Lepard sat down with Nico on Simply Bitcoin IRL last week. Listen to how he ranks the two.
So if you don't think Bitcoin's going to fail, then I don't see how Saylor fails. I think, and the only way Bitcoin fails, there are two ways Bitcoin has fails in my opinion. I've always said this. One is it technically blows up, but you've now got 16 years and 900 some odd thousand blocks of every 10 minutes. It just kind of works. And the other is if adoption just falls off a cliff and slows and everyone says, to hell with it. It's, I didn't need that. Nobody really needs digital gold. Well, guess what? In today's world, with the monetary system that we've got, and with the fact that gold, while it's the best form of money other than Bitcoin, but it costs 3% to buy it, and it's hard to verify it, and it's hard to ship it, and it's inferior in so many ways compared to Bitcoin. It's just kind of like, and yet it's still held its purchasing power and outperformed the S&P since 2000 by a lot. And that just speaks to how bad the monetary debasement is. So if you think monetary debasement's going to stop, if you think the government's suddenly going to get religion, stop overspending, balance the budget, and make the dollar a legitimate, strong currency, well, then, okay, this thesis isn't going to work. But I don't see any evidence that we're going in that direction. In fact, I see evidence we're going in the other direction. So I'm quite convinced that we're right about the thesis.
Right now, the inferior hard money is winning, and nobody in the mainstream wants to follow that thought to the end. So what happens when the world's savers discover the hard money that fixes gold's problems? A world this bullish on gold is standing one realization away from Bitcoin. And that sets up the thought I want to leave you with, because people have forgotten what this asset does when capital floods in. We haven't seen a true parabolic Bitcoin run since 2021. And honestly, from my perspective, 2021 even barely counts. That top was manufactured by paper leverage via frauds like FTX, Three Arrows, and Terra Luna. These were casinos stacked on top of Bitcoin. And the casinos burned down. Everything since has been a part of the long hangover. Meanwhile, silver and gold went absolutely vertical in 2025. Two hard assets with far bigger supplies and slower adoption curves went parabolic the moment real capital flooded in. Now think about what happens when that same wave reaches an asset with a totally fixed supply. The moment capital starts flowing back in and the world realizes the debasement trade was never over, it was just on pause, Bitcoin begins its next parabolic run. And with this little supply meaning that much trapped money, I think it'll be one for the history books. And we can actually measure where this run would be starting from. There's a metric called the realized price. It's the average price every Bitcoin last moved. So think of it as the cost basis of the entire network. Right now, Bitcoin is trading just 16% above its realized price, which means the average coin out there is barely in profit. That's rare. And every time Bitcoin has been at this level before, it's followed going up 41% within 6 months, 121% in 18 months, and 323% within 2 years. The 18 and 24 month windows have never once closed red. So let's run through how this could play out. The debasement trade kicks back into gear because the printing never stops. Capital leaks out of the AI bubble, out of real estate, and eventually out of gold itself. And it goes hunting for the one asset with no landlord, no counterparty, and no supply response. That's the setup for the kind of face-melting move this market forgot Bitcoin can make. And if any of that is even half right, you want your house in order before the crowd shows up. And that's where the Bitcoin way comes in. It's real humans working with you one-on-one, walking you through self-custody, security, and inheritance at whatever pace you're comfortable with. No jargon, and nobody making you feel dumb for asking basic questions. So head to thebitcoinway.com/Hurley and book your free 30-minute consultation today. Okay, let's bring this one home. This morning you were told the biggest Bitcoin holder on earth is trapped, cornered, and dumping on you. What actually happened? A $55 million tax harvest, a liquidity demonstration aimed at the ratings agencies, and a second inoculation dose the market absorbed before lunch. That's the noise. The signal was everything else this week. The savings of 1.4 billion people round-tripping to 2006. American housing rolling over. Central banks trading their own paper for hard money at record pace. The old system is telling you the era of broken money is ending. The bankers are running to gold because it's the hard money they understand. The rest of us get to skip a step. But now I want to hear from you. Was Strategy selling 3,500 Bitcoin a genius move, or a line Saylor never should have crossed? Is real estate as the world's savings account dead within a decade, or am I early? And when Bitcoin's next parabolic run finally comes, what's your number? Let me know where your head's at in the comments. And if you got value today, like the video, share it with a friend who sent you the panic headline, and subscribe to Simply Bitcoin for high signal Bitcoin content every single day. Thanks for watching, and I'll catch you on Thursday.